If we take a step back, of course, from the recent volatility that we've seen with the Greenland news and the issues that were happening in the Japanese bond market that's now spilling over into other bond markets and risk assets, the actual U.S. economy was accelerating, is in firmer footing than actually we saw in a year ago. And it's interesting because it's coming on the heels of another great year for equities, but a market that was generally unloved by professional investors. Really, retail investors were the winners in 2025. And so the setup is a bit confusing, but net, we've seen earnings generally pretty strong, although the reaction to them from investors have not been positive. But to be quite honest, the meat of earnings season really hasn't begun. Everyone's likely waiting for the Magnificent Seven names, which are coming soon. We are in a market environment, of course, where the president can drive a lot of the potential for return, but more often the potential for increased volatility. I think investors sort of have become accustomed to this. Of course, we saw the 2025 period where sharp decline happening in February, exuberated around the tariff news. I think most people coming into this year, perhaps myself included, were really thinking the tariff story was sort of a bit from the bygone days and weren't necessarily going to be as front and center. But with the recent potential for the introduction of tariffs around Greenland, of course, that changed the picture. So I think investors do need to be thinking about the potential for the long run opportunities, which is coming still from a generally positive fundamental case. But the path in 2026, especially it being a midterm election year, is going to be one that will see heightened volatility, and we're already seeing in the first few trading days of this year.